Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Our guest today will be Shane Smolian. Tomorrow we were going to have Stan Harley will be our guest, and Stan furnished the first chart for today that I wanted to discuss, and he'll discuss it again tomorrow too. You'll notice that the New York Stock Exchange advanced decline line has been rolling over. Folks, when it's rolling over, when 3 indexes are making new highs, that is flat out bearish. I don't care how you figure it out. Remember, those indices are made up of just certain stocks. The S&P has got 500 of them in there, of which about 100 run the whole thing. NASDAQ, you got about 20 that run the whole thing. And then the Dow Jones, you've got about a half a dozen that run the whole thing. So this is not what's happening in the real market based on my assumption of just looking at this advanced decline line. We made some major ABCD patterns yesterday. As we were speaking, of course, and whether this is going to be a big correction or not, I'm not even sure, but it was giving us signs. I sent out a special video last night to let the folks know that we were in real serious trouble and what to look for. So far, that's exactly what had happened. I told them to look for a little ABCD pattern at a 382 retracement, and that is exactly what happened. We went exactly to 44.58, and then we broke down hard. What we've done here today, and this is what we'll be doing in the all-day trading session on Thursday, is follow through with what we're seeing here, and that's really, what you want to try to do when you're doing shorter-term trading during the day, because you've got to be able to determine, where the market is supposed to be going. So if we see where we've been so far today, we'll get this up here and take a look at it and see how well it holds these numbers. Uh-oh, something happened wrong here. Just a minute, boys and girls. There we go. There's where we are so far. I believe we just went down below the old low there at 35. That sets up an ABCD down at 44.29. That's a very important number because that was at low the other day. And if we break that means that the whole thing has changed, and we're going to be heading down. We were down 41 handles just a little while ago, so that's it. But the rally that we had here between 10 and 11 o'clock was the strongest rally that we've had during the day. And if you would have done the work that we talk about all the time, if you'd have measured the high from 44.76 down to 44.36 to see what the 382 retracement on that was, you would be well prepared to see this market heading down to 44.29. I don't know. Would someone tell me what the last price is on the E-mini S&P? I would like to know that. If you don't have a minute to let me know, please. And I'm sure everybody's following that. I might even be able to get that right off of 44.32. Have we hit to 29, Mr. Z? I'd like to know that if we can. Folks, you have to be really careful up here being long stocks. Okay, we'll make that's pretty close. You have to be really careful here, boys and girls. And the reason why is that advanced decline line is telegraphing that there's more stocks going down than are going up. Now, remember, you're talking about 8,000 stocks in all of these indices, but these indices are structured to favor heavily priced stocks. The Dow Jones, of course, is price weighted. It's not cap weighted. The NASDAQ, you got stocks like Eagle. Well, it has a G in it. Google, trading at 2,900, and some of these others are just off the charts. Amazon. So these are just a few of the things that we're looking at here today. Very, very important. Okay, the second thing that we need to talk about today is copper. If you remember, we were talking about copper just the other day here. I know you have a question about Tesla, but we're going to do that. We're going to do that little by little. We were talking about copper the other day because it looked so very, very weak. And I want to get this up here to show you. Remember, Dr. Copper is supposed to be the thermometer of the stock market. And as you can see here, it made its high way back in May at 489, and now you see yesterday we were trading at 233 after coming off the 50% retracement, and now copper is heading down, and it looks like it's getting ready to go substantially lower. Give me 1 second here to get this chart up, and you'll be able to see it easily. There's where the copper looks. We're trading at 21 right now, and it looks like we're heading down to that 44.06 level, which would be possibly a double bottom down in that level. But it's certainly lagging what the stock market is telling us. You've got to remember, folks, it's a market of stocks, and that's what you want to look at each one of them separately and make your decisions as such. But with these stock indices and all these ETFs that Mr. Buffett has called the weapons of mass destruction, there's a lot of things going on in the market that we've not seen before with all this volume from some of these ETFs that I know very little about. All I know is that they can be quite dangerous, but we need to know how this thing is unfolding as we go through and look at some of these things. I've also been asked to share the chart that I shared yesterday on the Tommy O'Brien show, and also with you folks, and this is the chart that the Dow Jones Industrial Average, the Elliott Wave people worked off looking at time. You see the 1929 high, that was September 3rd, down at 1932, that was July the, I hope I'm right, Basil, July the 8th. And then the Dow was at around 40 at that time. Then we went up, and you notice the time that's really important, 1966 through 1982. That's when I was real heavily, I went on the floor of the exchange in January of 1962, and it broke out in 1983. It started to break out on August the 9th, 1982. And then once it broke above that level, that was equivalent to the Dow Jones getting above 1,100. And from there, the market continued to go much higher. In fact, it's gone way higher than what they didn't know where 0.5 was here, but, we're up to 30, we hit 35,300 and something, or maybe a little bit more. So this may be a super cycle move. We don't know. I'm not saying that. I'm just saying pay attention, because that advanced decline line is very important. If you look at that, not only that, if you look at the Dow Jones Transportation that we've already done, we've looked at it, several times, the Dow Jones Transportation is telling us that there's something that is not really copacetic in this darn thing. And so you've got to be very, very careful. So remind yourself of that. It's very, very important. We've posted it many times. I don't want to post it again because it's silly. Now let's get back to another market that we've been watching quite a bit, and that was Tesla. It's been in the news. It continues to be in the news. We want to get this up and show you how they're following through here. We had the 786 retracement hit exactly to the tick at 700. We'll be right back, folks.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted that we were talking about Tesla, and we hit that 78% level to the exact tick on Friday at $730.70. And what was interesting about that, it took out the highs from the previous high done 2.5 weeks ago by 50 cents. Folks, when you see a stock that takes out a high by 50 cents and it's trading for $700, that's telling you that there's a whole lot of resistance up in there, and especially when it hit the exact 786 retracement. And of course, we had bad news on Monday. We had more bad news today. And of course, the people that stayed in the stock are being punished for it, but it's starting to break down now. The target, of course, is considerably lower, another $100, it looks like, at least, to take it down to the 78% level. Now, I'm not sure of what other news will be coming out, but that's what we're looking at right now. Hang on one second. I think we have a caller coming in. And okay, the question, Mr. Z's asking about the crude oil. I think the crude oil has a chance. The fact today's retracement was a 78% retracement of the previous move. Give me 1 second, Mr. Z, and I'll get that crude oil chart up for you, and you'll be able to see where we are, because we are substantially lower than we were on Friday. I'm just going to get this up. You'll be able to see here that we made a 382 retracement, and if you just added that 382 retracement to an ABCD pattern, that takes you all the way down to 6180. But before you get to 6180, of course, you're going to have to get through that double bottom there at 6540. But if you take that out, that would be similar to what we're looking at in the S&P, folks, that 429 bottom. If we take that out 2 days in a row, that tells you got a bigger swing coming, and that would take us below $60 a barrel easily. As you know, we've been very bearish crude oil for quite some time, and it continues to be working lower. Same thing with the natural gas. Yesterday, we had a really nice, perfect 382 retracement in natural gas up at the a 396 level. The high was, I believe, 399 for just a few moments, and then it broke all the way back down to the 383 level again today. So that's telling you that trend is still intact. That doesn't mean it's going to stay that way. It just means that it's got a possibility of staying that way. The one that's very interesting, of course, is the gold market. And if you'll give me 1 second, I want to refresh the gold chart just to show you what happened last night, because it was very interesting to see what the market was doing. Let me get this, my 4-hour chart up here. I believe that's the one I wanted to show you. Yes, this is it right here. Stay with you. You'll be right with you. Hold on 1 second here. Here's the action in the gold since we made our bottom back on August the 8th. You'll see we had the 382 pullback there at 1715. That ABCD pattern measured to 1797, folks. And this is a 4-hour chart. Now, if you'll notice here, to the right of that 1797, the last 4 bars, that's a 4-hour chart. Look how long it stayed there at 1797. That was telling you that there was some major supply coming in at that time because they couldn't get it above the top of that. That tells you that, we broke from 1797, we broke $17 down to 1780. So that tells us that we're getting ready for another correction. Now, the largest correction that we've had since this thing has started from the bottom was 1795 down to 1718. So it's basically $37. The harmonic number is 34, so that's pretty close. So you want to look for a $34 correction from this 1797. And if you do that, 34 is going to take you down to just about 55. So you want to watch this 55. That's the old breakout level that we had once before. The same thing that's going on. So that's all I'm looking at when I'm watching technical analysis like this, is just to see how the things are, working. And that's pretty much what I'm trying to do when I'm looking at these things. And we'll be sharing some of that, all of it with you on the all-day trading session, on Thursday. I've got 3 really good PowerPoint presentations to go through and some other things. And I'm going to have some giveaways. Also, big surprise, the ES hit 44.29. Now, if this is no good, folks, the logarithmic traders, the guy that that pushed the market around quite a bit, now that that's broken that major support, and it does look like it's major support, that means the market could accelerate. Mr. Shane Smolian of wolftrader.com was chatting with me yesterday and was expecting this type of action today, and he'll be sharing that with you when he comes on the show at the next break in about 7 minutes. And as I mentioned before, we will have Stan Harley on tomorrow, who showed us the chart of the thing. Hey, one other thing I just remembered, we have to give a big sound of one hand clapping for Tim Boss, folks. If you remember, he said there would be a strong rally, I believe, right in to the 16th of August, and then a correction. I haven't updated it yet, but I had it written down here that that's what he said. So I'll have to update it, but I think that's exactly what he said. Now, whether this is the major top in the market, folks, doesn't mean diddly. It really doesn't, because there's going to be all kinds of swings. There's going to be bulls and bears all the way. They've got so many, and the bears are absolutely scared to death. So you're going to see lots and lots of swings. There may be a crash coming, but if it's coming, it's going to give us a really good indication. And let me show you why. If you went back to the last crash that we had, which was back in 1987, the market topped on August the 25th, harmonic convergence. We came down for 2 weeks. We rallied all the way up into October the 2nd. That was a 61% retracement. Then the market broke down. You see that red arrow there, the second on Friday, October the 13th, where we broke all that support from there the previous day, and then we were down 106 points that day in the Dow, which was a lot when the market was only trading at 2,600. That was a huge drop, and the options expired that day. I happen to have the October options. Of course, the next day, you'll see what happens. That's what you want to be watching for, folks. I've been preaching 382 retracements here for years, and that's the one you want to be watching. You watch that 382 retracement, because that's the last gasp. That's the mountain climber, getting ready to put his grappling hook on, and then unfortunately it's all covered with WD-40, and he's going to slip right down the slippery slope. So watch those numbers. We're trying to do our best to give you an idea for them. They come in the middle of the night sometime, but we try to give you an idea to pay attention to see if that's what it's going to do, because these markets repeat over and over again. That's why when I do this show, I try not to make it boring, because all these patterns are the same and they repeat over and over again. So those are the main things that we want to be looking at right here. But we've got copper breaking down. We got the advanced decline line. We got the possibility of all these ABCDs have finally completed. And we got these 3 drive to a top patterns and many of these things that have already completed. Some of them have failed, like in Microsoft and a few Google and a few others, but a lot of them are still in place, so that's it. Yeah, never boring, but always talking. Thank you, Marshall. I love you, buddy. Anyway, let's take it easy here. Take a break here. We're going to have Mr. Shane Smolian, the Wolf Trader, on next, and he's got some really good information for us. And we'll be right back.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Shane Smolian in the house. Shane, are you there?
Good afternoon, Mr. Larry. How are you?
I am good. Just living the dream, my friend. I want to thank you for the heads up on the market going down today. That was a big 10-4. Certainly appreciate it. You want to tell the folks what you're looking at right here, and also tell us about, you're going to be on the Money Show coming up pretty soon, aren't you?
I am. I'm going to be on the virtual Money Show. I'm going to be on August 25th. It's from 1 to 1:30. And I'm going to talk about how to balance out the Fed juice with the seasonal patterns, because we talk a lot about the seasonal patterns with solar cycle and a lot of these larger cycles, but balancing that out with the Fed juice is important. And I think that was really important with gold this year, because gold just did not respond during that positive seasonal pattern.
Okay, well, you've got it. Mike, tell us what you're looking at today, my friend.
Sure. Well, first of all, I want to talk about a nutrition study that I talked about on my webinar. I'll briefly go through this, but this is important. And I'm not going to go through the full details of this. You can go. I did a webinar last Saturday on this. It was like an hour and 20 minutes. But it was about a twin nutritional study about two doctors who are twins, and they went on these diets, sugar versus fat. Now, this is very popular because in the United States, people are very anti-sugar, low carb, and in Britain, they're very anti-fat for health. So these two doctors were two twins, and Chris Van Tulleken and Zand Van Tulleken. One lives in Britain, one lives in New York, and they went on this diet, and one of them was a low-fat diet, one of them was a low-sugar diet. And they went 1 month, and they started out Chris had 22% body fat to start, Zand had 26. And so they wanted to see how these two diets would affect different things, cognitive skills, physical abilities, things like that. So they put them on a stress test. First of all, they gave them what we call high-level thinking, which is basically what trading is. Trading is a high level, high stress. You have to pay attention. You have to remember. You have to make decisions. And the main thing here is I want everybody to remember your brain runs on glucose. That's what your brain's primary fuel is. It can run on ketones. That's a backup system, but your primary fuel is glucose. So this was Joe J.J. Kinahan from TD Ameritrade. He puts them both on these simulators. Everybody knows TD has the best simulators out there. You had to trade these paper money accounts. So they put them both on there. And so each twin was on a simulator. And they had this 1 day of trading. And so what was interesting about this study is that the high carb twin did better. He made more money. He made $800 in a day, but he had clear thinking and clear decision making, whereas the low carb twin only made $300. He had trouble thinking. His memory was compromised, and he had confusion. He was making errors. So I just thought this was interesting because trading is a very high. It's a high energy process. It takes a lot of focus. You have to be able to do multiple things at the same time. And I think this is interesting because this demonstrates, this is just one study, but this demonstrates how, look, when you feed your brain what it's supposed to have, glucose, that you're able to have energy, which is interesting.
That's really good information from someone who lives on carbohydrates. So
yeah.
Go ahead, my friend.
Yeah. This was another picture here I put. This was Sylvester Stallone in Rocky III. And to get cut up for that role, what he did was he basically cut out everything except for protein. He had very small amounts. He was on a high protein diet, which did not give him much physical or mental energy. Essentially, he got down to like 2.9% body fat, but he couldn't even remember his lines. So he had to take these little carbohydrate wafers to make his brain function well enough to remember the lines. And he would go into the corner and stand upside down to let the blood flow go to his head so he could think to remember his lines in the next scene. So I just think this is so interesting, and I have had the same experience. But when you go too low carb, it really affects your thinking process. And they did another study. They did another stress test where they put them on a bike, and they had them see who could ride away. And the high carb brother rode away much faster. Was able to go up the hill and basically put the low carb brother away. So both mentally and physically, the high carb diet did better. And they both lost weight, which was good. So they both lost weight on the diet. But what was interesting in the end was that the believe it or not, Larry, the low carb brother became type 2 diabetic. So many people don't link in their head low carb give you type 2 diabetes. How could that be? Well, really, the high fat diets have a very strong correlation to triggering the diabetes. So I just thought around the clock, from mental function to physical function to blood chemistry, the high carb did better. And of course, everybody's got their own thoughts about diet, but I just wanted to share this with you. But to me, the results are not surprising. Your brain runs on glucose. Your muscles need glycogen for intense exercise. and there is strong evidence linked to animal fats causing diabetes. So I just went through that a little bit. If you want to see more details about it, I
like very, very much. I think I hope folks liked it, because I certainly did, because I'm past the 8th furlong pole, so I watch what I consume, and that's very important.
Yeah, this was a book that I talked about called The Starch Solution, which is promoted by Dr. McDougall. He's kind of like the godfather of research, and I'm going to do a write-up on him this month in my Uranian newsletter, talk about the astrology of his chart. But he's really, really, really the best, and he has a book about this. So if you guys want to check it out. So anyway, that was my little.
One other question: Did they say anything about starting the day with 3 shots of vodka? Was that any?
That's it. That's in the conclusion. You got to read the whole book.
All right, my friend. Continue, please.
Okay, so let's talk about the market update here. So what's going on with the market? Well, first of all, I just want everybody to know I do have a pairs trading service that I've started. I have corn and wheat, and this is the Japanese yen and the British pound. So we have this pairs trade going right now, and this is long on the yen and short on the pound. And a lot of these pairs trades come from suggestions of subscribers who want to see different pairs. So we're going to be adding to those trades, and this trade has started out very well. And of course, corn and wheat do very well together. Now, if we get over to the S&P, I've been talking about these Fed internals in a sell for quite a while. I feel very confident about this. I can go back to 2009 and tell you that when the Fed internals are in a sell, the S&P doesn't do anything. It may go up for a few weeks, but eventually it comes back. So the S&P was running against these internals. A very strange thing that we saw was that the fear and greed index was peaking with price. To me, that's a negative. That is not a good sign. Something's wrong. And then, of course, we know August is a negative month. For many reasons, there's been a lot of liquidity issues in August, but also people are on vacation. So we saw that with the Afghanistan crisis, that everybody was caught off guard. They were on vacation. Biden was on vacation. President Biden was on vacation. Jen Psaki was on vacation. Congress is out. So this month tends to catch people off guard for a lot of reasons. And I've been hammering that drum, beating on that drum, telling everybody, be careful about August. It's the worst month for the S&P. It's worse than October since the Fed started this up in 2009, 2010. August is the month to be careful about. So I have some charts here to show you what happens when the Fed internals pull back. And this has been going on a weekly time frame. So this is big time when this happens.
Let's take a little break here, Shane. We'll be right back with Shane Smolian, Wolf Trader.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we're back with Shane Smolian, wolftrader.com.
Wolftraderfutures.com.
Wolftraderfutures.com. Okay, continue on, please.
All right, so this is the Fed internal survey. This is back in 2011. You can see that this was before the summer crash, and I had forecasted this back in 2011 as Fed starts to drop, and there was a month delay here, but then eventually the market follows. There's no exceptions to this. Like, it doesn't. There's no case where the Fed pulled back and the market kept going on its own. So this is why I've been very confident about this. Like, the market's going down. Like, and people have asked me, do you think this time it could be different? Do you think that it could be this or X or Y or Z? I'm like, nope, it's going down. If the Fed is pulling back, there's no chance that this market's going to go up without the Fed. It could go up for a few weeks and sustain, but if the Fed keeps pulling back like this, every time it follows. So in 2012, same thing, comes back up. This was the LTRO into here. This was the European version of the QE. This was the LTRO, the long-term refinance operation here. And then the Fed starts pulling back, and then of course the market pulls back. The market tried to go without the Fed, but the Fed kept pulling back, and then eventually the market comes back, and then the Fed finally bottoms here, and we take off here for our next round of quantitative easing. So no matter how you look at this, there's no escape from this if the Fed's going to do this. Now, I don't know why they're doing it. Maybe they're worried about inflation. Who knows? This is another chart here, and I'm just showing you the history of this so you can understand why I feel the way I do. And Larry, you know that I'm usually very bullish on the S&P, but usually the Fed is bullish. They're not now. This is 2018. This is the taper tantrum. Okay, so they started pulling back. This one took a few months. This one took about 5 months to manifest, but eventually it manifests and it pulls back here. This was what happened during that, and I call it the anti-Santa Claus rally because the market fell. This was right here into this December. And then this was during COVID. Of course, COVID, it falls without the Fed, but the Fed bails it out here. Then the Fed in May, this was before the election, they pull back. Maybe they felt things were getting overheated. I don't know. But eventually it shows up. So you can see here in the market, this is a weekly time frame. It always shows up. And here we are now. They have a steep decrease in the juice. And I told people, look, this can float around. I don't know. And Larry, I was kind of saying the same thing you were saying yesterday. Like, look, it could be today. It could be next week. I don't know when it's going to top. But I can tell you that this unfolds. This manifests itself when the Fed does this. And so I just felt very comfortable about this, you know, thinking that it's just not going to do it without the Fed. Now, this is when the Fed turns it off. It's been shut off for a long time. I mean, they shut this down back in July. But you can see, now I want to point this out to people. There is a trend line that was getting steeper and steeper. This trend line here, you can see, was on a trajectory to really go parabolic, and maybe they were worried that we were going to get a melt up. So initially we fall down, and then it comes back. But notice, Larry, the trend line is much weaker now. You see this right here?
Yeah, it's very apparent.
It did deflect lower when they shut it down. But again, The market cannot do it without the Fed. It just doesn't happen anymore. So when I saw this falling like this, I'm thinking to myself, there's no way. There's no way. I mean, the only thing that I could see is if, the stimulus that came from Congress, there are checks still coming in and all of that. But in terms of the big show, this is the big show. The big show is the Fed. And let me show you a little bit of Astro here. This is on August the 16th. This is the Planetary Speed Index. We have this in a newsletter. We have all the turning dates, but we just hit a turning date here. We're at a high on the Planetary Speed Index, 816. Now, I felt that the market would be weaker coming into the month to this point, but it really doesn't matter because you have to follow what the Fed is doing. The Fed is weak. S&P just confirmed the downtrend at 44.26. That was the key level it had to break. It broke it. If it closes below 44.15, that's another lock for a downtrend. There's a very good chance that we have turned at this point. Now, the way that this has been fits and starts, it could still try to go up again and throw a fit and all of this. But as long as the Fed is pulling back, this market will follow down. And the thing about this is that well, let me put it to you this way. The history since 2009 has been that every single time this has happened, the market has pulled back. So that's why I'm saying that. But the amount that they pulled back here, this is showing up on the weekly time frame. This can cause damage for months. This can cause damage for up to 2 months now of a stall in the S&P. When they pull back this much, you can have 2 months of a stall in the S&P without a problem. In fact, if you go back through history, that's what you see. Now, I have a chart here. The next chart here is showing the Bollinger Band width. I love the Bollinger Band. I think it's one of the best inventions ever created. God bless John Bollinger. This thing can be used in so many different ways. One of the ways that I like to use it is when the Bollinger Band pulls down to a low level, the volatility gets low and it precedes an increase in volatility. So going back here, this is going back to February. This is 2021. We're going to show you all the times that this Bollinger Band pulls back. So here's the first letter A here. This was in February. When it pulls back to this level down into here, the volatility in the market starts to pick up. So here we go. So notice the volatility is low, and then all of a sudden the volatility starts to pick up in the market here on letter A. In May, we can see here we had this rally coming, but the Bollinger Band gets down to that key level. So look, it was just low volatility, and then all of a sudden, here's your volatility coming on the letter B. Letter C here, you can see Bollinger Band drifts down, hits our key level here. Everything was fine. All of a sudden, here's your volatility, but this time it shot back up, but the volatility increased. And now on the letter D here, you can see that just a few days ago, we hit this level again here, and that is a sign that the volatility is probably going to start to increase. So we saw that yesterday. We saw it go down. We saw it go up, and now it's doing this. So what that means is that it could still try to whip back the other way too, because the volatility is increasing. But when we see this is not typically a good sign. Typically, it's not a good sign for a rally. It can be. Back into here it was, but for the most part, when you start to see that Bollinger Band hit those low levels, it's a warning sign that look, bull markets tend to be low volatility. That's not what we see. Now I'm going to show you one more, the king chart of all low volatilities. This is right before COVID. This letter E here down here, this is when the Bollinger Band gets down to this really, really low level down into here. And you can see up into here, that was the top. And you can see, so it's just very, very low volatility, very, 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 very low. And then all of a sudden, it all breaks loose here during COVID, okay? So when I saw that Bollinger Band get down there, I'm thinking to myself, man, something's about to change. And you can't see it a lot of the times in the trend, but look, when that volatility gets down that low, something's about to change. Now, again, it doesn't always tell you the direction. In fact, it never does. It just tells you the volatility is going to increase. But when you put it together with other factors, when you put it together with the fact that the Fed has been pulling back like this, when you go back and you look at the history of this thing and you see that it's the same fate every time since 2009. So look, this is what I love the Fed internals, because I can avoid all of the noise and all of the little head fakes, and I can just look at this chart and I can tell, look, this is what the story is. And now the Fed can always respond, Larry, now, and we know this. If they choose to, they can start to ramp things back up. But the problem is they've had a big pullback here.
Yeah, that's very good information, my friend. Stay with us, please. Shane Smolian, WolfTradingFutures.com. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, we're back, folks. We're talking with Shane Smolian, WolfTraderFutures.com. Shane, we just broke below, or right at your second number at 44.16. Do you have lower numbers? That's one of the questions one of our listeners is asking.
Well, I go mostly by time. I have breakout levels. That's a breakout level, 44.15, 44.16 at the close. I think we could be at a short-term low on Thursday, so I'll give you that. If you Thursday at the close could be a short-term low. But as long as the Fed is doing this, I'm bearish. All right, getting to Tesla here, we do have a stock and ETF service. This is Tesla Daily here. Tesla went into this sell on 8.4. It's falling down still. This is still in a sell on the Fed juice. Also, we look at gold miners. Gold miners has been modeling better than gold, to be honest with you. The Fed juice on this. This is still in a sell, heading lower. I know gold on the futures is still in a buy. It's still kind of waffling around, but I mean, this is not a good sign. Gold is coming into a major seasonal high, everybody, and it's falling. That's not a good sign. Bitcoin is also at a point right now where it's at an important high. Bitcoin's been following the seasonals. So I'm a little, Larry, I'm getting a little concerned here across the board that things are not looking good on multiple fronts here.
I see the same thing, my friend. I see the same thing. Hey, listen, thanks for joining us, and we'll have you on again. Be safe and continue this great work, Shane. You're doing a great job. Yes, you
Have a
bet.
great
We
day,
love having
everybody.
you here. You bet. Thank you for joining us. It's always nice to hear a different approach, and it's certainly happening while he was on the air, which was quite interesting. So we'll see what happens with these support and resistance levels. The one thing I did want to bring to your attention, folks, is the fact that how badly the Russell has been acting. You'll notice that it made its 61% retracement way back here on August the 9th and has continued to go lower. We just broke below 1 standard deviation a little while ago, so that's another bad sign looking at the market. Stay tuned, folks, because tomorrow we're going to have Stan Harley as our guest, and Thursday I'll be out with the full day trading. May God bless.
Building wealth trading in the stock market seems impossible to most people. They think